Welcome back, everyone, and thanks for joining me here again on the podcast. Today, we're going to dig into one of the most hyped and controversial numbers in all of crypto, the kind of headline that refuses to go away. The idea of Bitcoin hitting $1 million. You've heard it from Cathie Wood at ARK Invest. You've heard it from Armstrong at Coinbase. You've seen it plastered across Twitter by influencers, and you've probably heard friends talk about it down the pub. For some, it's the dream number. For others, it's proof that the crypto space is full of wishful thinking. But either way, the number sticks. $1 million for one Bitcoin. It rolls off the tongue. It sparks imagination. It makes headlines. And it leaves ordinary investors with a big question. If everyone keeps saying it, why hasn't it happened yet? And what would it actually take for Bitcoin to reach those heights? That's what we're going to unpack today in detail. We'll start with where this number comes from, why analysts throw it around, and what the maths actually says about Bitcoin's potential. We'll look at why it hasn't happened yet, what the hurdles are, and then we'll ask what it would take. From institutional flows, to macro shocks, to retail adoption compounding quietly in the background. We'll also bring in analyst voices, from the ultra-bullish like Cathie Wood and Armstrong, to the more cautious like JPMorgan's Nicolaus Panagurtzoglou. And we'll keep it relatable. Because while headlines scream about $1 million Bitcoin, most people listening here don't have hundreds of coins, they've got a fraction, maybe a few $100s worth. What does the $1 million dream mean for them? Is it a life-changing future, or a distraction from the gains that are already available? So, let's begin by asking a simple question. Where does this number actually come from? Because it isn't random. It's not just hype from influencers chasing clicks. The $1 million target is rooted in comparisons to other stores of value. Bitcoin today has a market cap in the trillions. Gold, by comparison, sits at over 12 trillion. If Bitcoin were to match gold's market cap, each coin would be worth roughly $500,000 to $600,000. That's the first leap. Then extend it further. If Bitcoin didn't just match gold, but also ate into government bonds, cash reserves, or even a slice of global equities, you quickly start nudging toward $1 million per coin. It's math based on scarcity. There will only ever be 21 million Bitcoin. And of that, estimates suggest a few million are lost forever, stuck in wallets with forgotten keys. So the effective supply is even smaller. If trillions more dollars chase that limited supply, the numbers can stretch very quickly. This is the foundation of Cathie Wood's argument. At ARK Invest, she's been one of the most consistent bulls in the space. She has repeatedly forecast Bitcoin at 1 million by 2030, and in her most optimistic models, even 1.5 million. Her case is built on institutional adoption. She points out that if large asset managers, pension funds, and sovereign wealth funds allocate even a small percentage of their holdings into Bitcoin, the flows are massive. Imagine if pension funds globally, managing over $50 trillion, shifted just 5% into Bitcoin. That's $2.5 trillion in inflows. Spread across a fixed supply, you're suddenly catapulting the price. And it's not just her. Armstrong, the CEO of Coinbase, has also backed the million by 2030 narrative. He points to regulatory clarity, especially with the US finally approving spot Bitcoin ETFs, as the trigger for massive demand. Now that retail investors can buy Bitcoin exposure in their brokerage accounts next to Apple or Tesla stock, Armstrong argues the floodgates are open. Then there's Fidelity's Jurrien. He's not as bombastic as Wood or Armstrong, but he offers a crucial voice of credibility from the traditional financial world. As director of global macro at one of the largest asset managers, he argues that Bitcoin belongs at the top table, alongside gold. He highlights its scarcity, its independence from fiat systems, and its role as digital property. He doesn't throw out $1 million headline casually, but he makes clear that the structure is there for Bitcoin to rise far beyond where it is today. And then, of course, we can't ignore Balaji Srinivasan, the former Coinbase CTO, who infamously bet that Bitcoin would hit $1 million within 90 days. That didn't happen. In fact, it didn't even come close. But his bet was less about accuracy and more about attention. It lit up Twitter. It put hyperinflation and fiat collapse into the mainstream conversation. and it cemented the million-dollar figure as part of the Bitcoin mythos. On the other side of the spectrum are the cautious voices. JPMorgan's Nicolaos Panagirtsoglou and his team recently published a note valuing Bitcoin closer to $126,000 based on volatility metrics and capital flows. Their model assumes Bitcoin converges with gold's volatility over time, which justifies higher valuations, but they see the path as gradual, not exponential. For them, talk of $1 million is not only premature, it's potentially dangerous, because it sets unrealistic expectations and encourages reckless risk-taking. The Bank for International Settlements has also raised red flags, warning that if Bitcoin ever did grow large enough to rival sovereign currencies, the systemic risks could be immense. Governments might respond aggressively, central banks could intervene, and the dream could collide with political reality. So why hasn't it happened yet? If the math is so compelling, if analysts keep calling for it, why are we still waiting? The first reason is regulation. For over a decade, institutions were effectively locked out. Without ETFs, without clear custody solutions, without regulatory green lights, the trillions managed by pensions and asset managers simply couldn't flow in. It wasn't a matter of demand, it was a matter of access. That has finally begun to change with spot ETFs now trading in the US, pulling in billions in their first weeks. But it took years to get here. The second reason is adoption. Global surveys estimate that fewer than 5% of people hold Bitcoin directly. That's tiny compared to the internet, smartphones, or even traditional banking penetration. For Bitcoin to justify $1 million price, adoption has to go mainstream, across continents, across demographics, across use cases. The third reason is volatility. Every cycle, Bitcoin has soared and then crashed. In 2017, it hit 20,000, then collapsed to 3. In 2021, it hit nearly 70,000, then fell back under 20. Those drawdowns are brutal. They scare investors. They keep institutions on the sidelines. Until volatility stabilizes, the road to 1 million is rocky. There's also the issue of trust. Every time an exchange collapses, like FTX, or a stablecoin unravels, like Terra USD, it undermines confidence not just in those projects but in crypto as a whole. For Bitcoin to make the leap, the ecosystem around it has to mature. Custody has to be robust. Regulations have to be clearer. Transparency has to be better. Without that, the big money stays cautious. So, what would it actually take for Bitcoin to hit 1 million? Let's play this out. First, mass institutional adoption. Picture a world where sovereign wealth funds in the Middle East allocate to Bitcoin, where pension funds in Europe and the US make it a standard holding, where Fortune 500 companies diversify their treasuries with it. That alone could add trillions. Second, global macro shifts. If inflation remains sticky, if debt crises worsen, if trust in fiat erodes, the narrative of Bitcoin as a hedge strengthens. We're already seeing the US debt north of $34 trillion. If bond markets wobble, alternatives like Bitcoin look more attractive. Third, the ETF effect. We've only just seen the first waves, but if ETFs become as common as gold ETFs did in the 2000s, then a slow, steady flood of capital could drive the price higher year after year. Fourth, retail compounding. Millions of people quietly stacking 50 pounds, 100 pounds every week. It doesn't make headlines, but it creates relentless demand. And demand, against fixed supply, drives price. Michael Saylor is worth mentioning here. His company, MicroStrategy, has turned itself into a Bitcoin proxy, borrowing billions to buy coins. He calls Bitcoin digital energy and a swarm of cyber hornets. For him, 1 million is not a moonshot, it's inevitable. Whether you agree with his language or not, his conviction has influenced other CEOs and boards to take Bitcoin seriously. And then, there's the retail lens. Let's make this real. If you're listening right now and you've got $200 in Bitcoin, what does $1 million Bitcoin mean? It means that tiny holding could be worth over $5,000. If you've got $500, it could be worth more than $12,000. Life-changing money for many households. But here's the thing. You don't need Bitcoin to hit 1 million to benefit. Even a move to $200,000 would double or triple that money. Even smaller moves matter. Too often, people get lost in the hype of the moonshot and forget that steady gains are already powerful. The difference between $500 and $1,000 may not sound like headlines, but it's meaningful in daily life. Cycles play into this too. Bitcoin's halving events, cutting block rewards every 4 years, tighten supply and trigger rallies. Each cycle has brought new highs. From $1,000 to $20,000. From $20,000 to $70,000. Now past $110,000. The $1 million call may not happen this cycle, but each peak has been higher. Each floor has risen, and the direction is clear. Patience is key. Before we keep going, a quick word from our sponsor. If you're serious about holding Bitcoin, don't leave it on exchanges. Protect it with a Ledger wallet. That's how I secure my holdings offline, safe from hacks or failures. There's a link in the description if you want to safeguard your crypto the same way. Now let's step back and look at the bigger picture. Imagine ETFs continue to grow. Imagine institutions slowly but steadily drip money into Bitcoin. Imagine retail stacking never stops. Combine that with the macro backdrop, rising debt, persistent inflation, political instability, and you have the ingredients. Add in the technological narrative, Bitcoin as programmable money, as collateral, as a foundation for financial rails. Suddenly, the $1 million number doesn't look like science fiction. It looks like an endpoint on a long curve. But let's also imagine the opposite. What if institutions don't come in as expected? What if ETFs are a trickle, not a flood? What if governments decide to crack down harder? What if stablecoins or central bank digital currencies capture the demand that Bitcoin was supposed to? These are real possibilities. They don't kill Bitcoin, but they slow it down. They keep the dream just out of reach. So where does this leave us? Bitcoin at 1 million is possible, even plausible, if enough variables align. But it's not inevitable, and it's not quick. It could take decades. It could require crises. It could require political and economic shifts bigger than anything we've seen in our lifetimes. The $1 million dream is useful as a narrative, but it should not be the only reason you hold Bitcoin. Because the truth is, Bitcoin is already working. It's already creating wealth. It's already serving as a hedge, as a store of value, as an asset outside the fiat system. For the everyday investor, the key isn't whether Bitcoin hits 1 million in 5 years. The key is whether you can hold, whether you can manage the volatility, whether you can see the gains that are already there without losing sight of reality. Bitcoin has always been David against Goliath, a decentralized network against central banks, against governments, against Wall Street. The $1 million headline is the slingshot. Whether it hits or not, the battle itself is reshaping finance. And for those willing to hold through it, whether it peaks at $200,000, $500,000, or $1 million, the journey itself is where the value lies. Drop your thoughts in the comments. Do you believe in the $1 million future, or do you see it as a distraction? Smash like if you're stacking, follow for the next update, and as always, we will see you at the top.